So let me start with a couple of important dates. These are becoming more and more important because with the new higher interest rates that the IRS is charging, like everybody else, the interest rates are higher. These fees, the penalties for late filing and late payment are very substantial. And then when you add these higher interest rates on top of that, it's really becoming large numbers. So be aware of the dates. Your April 15th and May 15th deadlines, and then April 15th will be individual gifts and estates, your C Corps, and then May 15th is your 990s. So the penalties for late filing on all of those are very substantial. Make sure you keep up with those deadlines, and remember that April 15th is also the deadline for making your IRA contributions. So the 401k, the employer portion of the 401k can go to the extended deadlines, but the IRA and the HSA, that deadline is April 15th. So make sure that you remember that deadline. We want to talk about some important things that we see, and these are things that we run across every single day that our clients maybe aren't bringing with them or they don't know that they can deduct. So we have a list of common deductions, whether you're self-employed or you're individual, that can help jog your memory. If you're one of our tax clients, then you would get an organizer. And our organizers are very detailed. You may think that they're a little bit time consuming, but take your time and go through those organizers because the point of that is reminding you of all of the deductions that you're eligible for, making sure we pick up all your income and making sure eligible for any tax credits that we pick those up as well. So the first thing you want to make sure when you're getting your information ready, whether you're preparing or we're preparing, is we need to have all of your statements of income that you've received throughout the year. So the IRS is getting a copy of these. They will pick them up. So we want to make sure that we report those on your tax return. If I leave off a 1099 on your tax return, the IRS will pick that up, but they won't pick up the related deductions. So if you have a capital gain, brokerage statement maybe has a $10,000 capital gain, they won't pick up your basis. So maybe that's really only a $50 capital gain. To the IRS, that's a $10,000 capital gain because that was your sales price. And then we would have to go back and amend your return. That's just an extra expense. So number one, most important thing, make sure we're aware of all of your sources of income, your W-2s, your 1099s, gambling income, debt cancellation income, retirement account distributions, anything that you received this year, make sure we're aware of that. And then equally important are making sure that we have all of your deductions on the tax return. So we have a list of most commonly missed deductions, and you can get that in the slide deck, which is attached. And those will be things like your home office deduction. So a lot of times people will say, well, I want to do my home office deduction, and they'll give us property taxes and mortgage interest. And we need property taxes and mortgage interest, but we also need your property insurance, your repair and maintenance, any kind of improvements that you've done. Then we can also depreciate that portion of the home. So we need the cost of the home plus any improvements, the cost of the land, and then we need to know what your square footage is on that office compared to the square footage of the total house. So make sure you're not leaving off your insurance and utilities and your improvements and your repair expenses when we deduct the home office. So other expenses that we often see that people forget to include on their business tax return, or maybe they have a farm. We've noticed that people forget to include their cell phone expense and their internet expense and business interest. If they have a business credit card and they're paying interest on the business credit card, we can take that. Any kind of insurance, if you have a farm, maybe you have property insurance on that farm, mortgage interest, utilities, parking and tolls, interest on your vehicles. Check the slide deck. We have a list of deductions that are most commonly missed, and I think you'll find that helpful. And then finally, we want to make sure that we are picking up all of the tax credits that you're eligible for. One that's commonly missed is the fuel tax credit for your off-road fuel expense. Maybe if you have a farm and you're putting gas in your tractors, we can take a fuel tax credit for that. Again, we have a list of these credits in the slide deck, but the ones that we see missed most are the energy efficient improvements credit. That I believe is $3,200 or $3,600 for 2024. And the dependent care credits, education credits, very commonly missed, fuel tax credits. So check out that list in the slide deck and make sure we're picking up all of the credits that you're eligible for. A lot of those are refundable. There's a new dependent care credit in Congress right now, and I think that will probably be finalized in 2024. Unfortunately, I think it's going to be an advanced child care credit, so we'll have the whole nightmare that we had in 2021. So watch out for that. Probably get another stimulus. It's an election year, so we'll probably get another stimulus in 2024. And that will be income-based. So if you're going to have a low-income year, 2023 would be a great year to take all of your deductions, any kind of losses, and get your income low, and then you would be eligible for that stimulus, possibly is coming in 2024. So the last thing we want to talk about is just some basic strategies if you're for individuals, and then if you're self-employed and you have your own small business. So for individuals, make sure that you are picking up. I mentioned earlier that the IRA deadline is April 15th. So we always recommend start with any kind of a matching. If you have a 401k and your employer matches your 401k contributions, max that out. So if they match 3% and that's $3,000, make sure you're contributing that $3,000. Any amount over that, you may be able to pull into a solo 401k. So start with your matching 401k, employer match 401k. Make sure you're picking up your HSA and maximizing your HSA. Maximize your IRA for you and for your spouse. Some people are doing Roth IRAs for the children, Roth IRAs for their aged parents that don't have much income. Those are the things you want to get done. The deadline on the IRAs is April 15th. And then you consider, once you've covered those basic areas, then you consider you're maybe investing in a small business or real estate, things like that. And then for self-employed people, again, qualify for this solo 401k. You can do the mega backdoor Roth solo 401k. Make sure you're picking up all your depreciable assets. So if you're just bringing us an income statement and we can't see your balance sheet and you've purchased new assets, we don't know that. So make sure you're giving us a list of those depreciable assets. Again, frequently missed expenses on the business side are your cell phones, your business interest, internet, tolls and parking. Also, startup and organizational costs. That's also very frequently missed, and then the home office deductions. Once you have prepared your tax returns, that's the best time to start planning for 2024 because you're more likely to remember, I didn't do this year. I want to make sure I do that in 2024. June and July are great months if you want to do some tax planning with our firm or really any CPA firm. Those will probably be really good months to get in and do some tax planning. I think we offer a discount in June. If you found this content helpful, be sure and like and subscribe, and we'll see you next time.